Well, hello everyone. This is Roger Scott from Wealth Press. It's April 29th. It's a Wednesday. And again, I have no idea where this year has gone, but as I always say in the mornings and in the afternoons, let's get into it. So, global stocks edged up on Wednesday ahead of U.S. economic growth figures and the Federal Reserve rate decision, which is going to happen later today and tomorrow. Investors seemed buoyed as the government planned to ease antivirus controls and allowed businesses to reopen. Now, in Europe, stocks were slightly up, while in Asia, they also advanced. Japan markets were closed for a holiday, and Wall Street is going to open higher because we're going to talk about earnings from the big five tech, including Google, which came out last night. Earning reports in Europe were mixed, with Volkswagen saying its business is resilient. I'm not sure about that, despite a drop in sales. But plane maker Airbus warning that the air travel industry troubles are just beginning. Industry will keep an eye on GDP. That's what I was talking about earlier. For the U.S. first quarter, which are expected to show an annual drop of 5% or more. Keep an eye on that number because that's what the market's targeting. The decline will end the longest economic expansion on record. The Fed is not expecting to take any action over the next few days. The meeting is expected to end today. President Trump running for re-election amid a slump that has wiped out more than 10 million jobs. Ouch. Pressing other governors to lift lockdown, Cuomo of New York, one of the hardest hit and most populous states, says controls will be eased only after numbers of new cases decline. Many professional investors, including myself, are skeptical of the U.S. stock market's big rally, which has driven the U.S. S&P 500 up 28% from its March lows. I'm very wary of how fast these stocks are rebounding despite the gradual pace of resumption. That is scaring me. Now, let's talk about earnings. We've had Alphabet report. The stock is up before the open over 10%. Numbers were better than expected. Let's get into that. Now, the numbers were bad, but not as bad as people expected. Google reported its weakest revenue growth in nearly 5 years as the pandemic-driven recession begins to shrivel its advertising sales in the first quarter. The January-March earnings for Google parent Alphabet offer at how digital ad fared. Now let's look at what the numbers came in. Alphabet's first quarter revenue increased 13% from the same period last year to $41.2 billion. Now, while most companies would celebrate that kind of growth, it's a significant downturn for Google. Now, the performance announced Wednesday was slightly better than the revenue of $40.8 billion projected by analysts, which is why the stock is up. Alphabet earned $6.8 billion during the quarter, a 2% increase from last year, much better than expected. So things are slightly better than expected. Now, the question is Alphabet going to give the QQQ a much-needed boost today or not? The QQQ, the NASDAQ, is slated to open about 2% higher, but I don't know if that rally will last. I'm liking what I'm seeing so far. Now, today is Wednesday, and you know what Wednesday is? It's the day I give you red meat. I give you the full trade, including the option, stop loss, and everything. Now, here's how we're going to play this today. We don't want to go with the tech, and we don't want to go with the strongest sector. Instead, we want to go with the weakest sector over the last 30 days. We're thinking short term right now. So if I look over the last 30 days, the weakest sector is industrial. A lot of traders thought it was the energy sector, but believe it or not, energy sector has actually not been doing so bad over the past month. It's actually been jumping up. But industrials are not doing so well. Now, this is the industrial sector. We had the cross, the 50-day and the 200-day cross, much earlier than most sectors. If you look at the S&P 500, for example, you will see that the cross happened later, happened all the way here. This one happened sooner. Like if you look at technology, for example, you will see that cross literally happened like 4 sessions ago. But if you look at the industrial sector, it was one of the first ones to cross. And even now, with the NASDAQ trading above the 50 and the 200-day line and the S&P coming close to the Let me again show you the S&P. It's coming very close to the 50-day line. Already past the 50-day line, coming to the 200-day line. The industrial sector is still lagging and is just only now touching the 50-day line, which is below the 200-day line, so it doesn't really matter. We would only care about the 200-day line. Now, if the 50-day line was trading above the 200-day line, then it would become a lot more valuable. But since it's below, and since it's bearish, and since it looks like it's going to come off a little low here, I think we're going to see another downturn in the industrial sector. And lastly, the pullback, we hit a low of 47.83, and over all this time, we were able to rally to 64. So we went from the high 40s into the mid 60s. We've seen better gains. The S&P gave us 28%. This did not. So I think we want to short the industrial sector. We don't need to pick stocks right now. We got the industrial sector, and it's the weakest, and I don't think industrial stocks are going to pick up for a while. So the sector is XLI. We're going to sell it on a sell stop at 61.50, and we're going to cover it at 65.50. So we're going to go short at 61.50 on a stop, and we're going to buy it back. So we're selling at 61.50 on a stop, and we're buying back at 65.50 on a stop. Selling 61.50 on a stop, buying back 65.50 on a stop. Now, if you're an options trader, let's see how far out we want to go. We definitely don't want to go 3 days out, and implied volatility is not too high in industrial because volume's not that high. So let's buy us some time. Let's go, how about 52 days? That way, if it doesn't do anything within the next 20 days, we'll liquidate it. And I'll tell you how much the decay will be. All we'll have to do, assuming volatility is the same. So let's look at an option. It's right now 64.25. How about we go right near the money? We go to plenty of open interest. This is the 6/19 expiration, 52 weeks from today. We'll go ahead and we'll pick the 64 strike price. The delta should be there about 70, should give us an exposure for every dollar we see down at about 70 cents to begin with. Now, interestingly, let's say that we hold this option for about 22 days and nothing happens, right? Let's see what the 64 would be at. Look at this. It's higher. The 64 31 days from now is more expensive. It's actually more expensive. It's 485 than the one that's further out. So you're not going to have a lot of trouble liquidating this option because implied volatility is still high. But again, I like this 64. It's got 52 days left. So we're looking at the put. We're looking at the 64 strike price. You're going to pay around 350, 360 for this option, no more than that. And again, we're buying the option. It's a put, so it goes down if the stock goes up, and it goes up and makes us money if the stock goes down, which is what we want. Now, again, we're looking at the XLI ticker symbol. We're looking at the 6/19 expiration, and we're looking at the 64 put. And if the stock if the ETF hits 61.50, we will initiate the option. If the ETF hits 65.50, we will liquidate the option. It's that simple. We're using the option as a proxy. Now, before I let you go, I've got something big for you. Folks, this is your chance to learn a very low-risk strategy that has traders seeing a reliable income. Again, reliable income in as little as 7 days. James West is going live today at 1 p.m. to show you the market defect that could put $4,875 in your pocket, not a year from now, by next Friday. Next Friday. This is it's 2 clicks of mouse, 5 minutes a week or less. You could get thousands automatically deposited straight into your account. What are you waiting for? Come on, folks. 7 days, up to almost 5K deposited into your account, low risk, 2 clicks, 5 minutes of your time. Click the link below or the button at the end of this video. Check this out and sign up. You don't want to miss it. It's happening at 1 p.m. Eastern Time today. James West is going to show you guys how to make money in this market. Reliable, short-term, fast, easy, instant, reliable income. Up to 5K a week. You don't want to miss it. 1 p.m. Eastern Time today. Don't miss it. Talk soon.